So there's Admiralty Law treaties, there's United Nations treaties, there's a treaty with NATO where Canada, America, and England and Australia's militaries are all part of each other. These things sometimes overlap, sometimes don't, sometimes conflict with each other, sometimes don't. But it doesn't, just because one thing is true doesn't mean another thing has to not be true. They could just be part of different treaties.
The CFTC's own reports of November 2009 show that just 2 banks held 43% of the commercial net short position in gold and 68% of the commercial net short position in silver. In gold, these 2 banks were short 123,000 contracts, but long only 523 contracts. And in silver, they were short 41,000 contracts and long only 1,400 contracts. How improbable is that these 2 banks attract most of the investors who want to sell short? It has been possible to extrapolate to 2 banks that hold these large manipulative short positions in the COMEX, or JP Morgan-Chase and HSBC, because of their huge positions in the OTC derivatives market, whose regulator, the U.S. Office of the Control of the Currency, does not provide anonymity when it publishes market data. In the first quarter 2009 OTC derivatives report, JP Morgan-Chase and HSBC held more than 95% of the gold and precious metal derivatives of all U.S. banks, with a combined notional value of $120 billion. On March 23, 2010, GATA Director Adrian Douglas was contacted by a whistleblower named by the name of Andrew Maguire. Mr. Maguire, formerly of Goldman Sachs, is a metal trader in London. He has been told firsthand by traders working for JP Morgan-Chase that JPM manipulates the precious metals markets, and they brag how they make money doing so.
It's like a computer. It needs to recognize certain pieces of paper, otherwise it gets confused.
It would not be possible to predict such a move in advance unless the market was manipulated. In an email on that day, Mr. Maguire said, "It is common knowledge here in London amongst the metal traders, it is JPM's intention to flush out and cover as many shorts as possible prior to any discussion in March about position limits. I feel sorry for all those not in the loop. A serious amount of money was made and lost today, in my opinion, as a result of the CFTC. Month after month, HSBC and JPM sell short, and large quantities will overwhelm all bids and make unsuspecting option holders lose their money. As predicted in advance by GATA, the manipulation started on March 19th when gold was trading 11.26. By last night, it was down to 10.85.
Basically, it's paperwork. It really just is paperwork.
COMEX paper market will become dysfunctional.
You can just try to finish up.
We're finishing up. With force majeure having to be declared as the concentrated shorts are unable to deliver on their obligations. We urge the CFTC to report fully and candidly on these markets and take appropriate action. Thank you.
Thank you. I want to thank all of our panelists. And
there's all sorts of wild accusations and conspiracy theories out there. The one that we've got hundreds of comments on in the last several days is that a particular trader, and as the chairman, Mr. Sherrod, talked about, we don't list particular traders, so whoever is suggesting it is surmising, has 40% of the silver market. That's incorrect. Right now, if you go to 2 days ago, our Commitment of Traders report shows 23%. I think that's too high. I think it should be lower. I want position limits. But I want to make sure that we're not listening to everything that somebody says.
GATA has long implicated the COMEX as being a mechanism by which gold and silver price suppression is implemented. The smoking gun is the excessive concentration of bullion bank positions. This concentration enables market manipulation, just as market manipulation was a justification offered by the CFTC in 1980 when it acted against the Hunt brothers for manipulating the silver market.